Really important and really good to have you, Dhananjay. What's happening here? The most loved space, suddenly now the most hated space, and in a lot of stocks, there are fundamental reasons for this to happen. Let's discuss each of these topics one by one. Firstly, Kotak Bank and Bandhan Bank, because they are in the eye of the storm. What have you made of this? What kind of impact can it have on these two entities?
So I think clearly the signal from the RBI is very clear that the promoters have to dilute their stakes, and I think RBI had given a very long time for instance to Kotak Bank to actually to enact that, but I think that has not come about, and whatever Kotak Bank had actually proposed by way of convertible debentures, I think that has also sort of not been accepted. So clearly, I think RBI through the Bandhan Bank communication also, it is coming out very clear that there has to be a dilution, and sooner than later. So essentially, these banks will be forced to dilute either by selling the stake in the market or through through placement, etc., or they will need to acquire. So I think that the window of opportunity is actually shortening and very quickly. So I think the pressure on the stocks hence will be there. It will be very important for the banks to actually come and actually indicate to investors how they plan to do about it. So how do they plan to go about it? So essentially that communication is there, and as long as it is not there, I think the stocks will be under pressure.
You expect, Dhananjay, that instances like this would keep an overhang which could be of a slightly longer tenor than what the markets might otherwise be anticipating? For how long would something like this stay as an overhang? Because clearly, even if the stake sale has to happen, it's not a matter of weeks before it will happen. It's probably a couple of months at least, if not more.
Yeah, I thought December was the terminal period, the terminal month. So, as I said, the window of opportunity is squeezing. So, I think eventually, if the banks do not come out with a clear strategy of how do they want to do this, either by selling stake, selling it to a certain sort of private equity, or maybe sort of acquiring some bank, I think that uncertainty will be there, and it is not a very quick fix. So it will take time. So I think maybe 3 to 6 months time is one can consider when first the decision has to be made and then it has to be executed. Acquisition of a bank, for instance, also has to be the target has to be identified, then it has to be executed. A lot of procedural stuff that will need to be done as well. So I think this overhang, you're right, actually we can actually endure longer than what many of us think.
Dhananjay, the broader financial space as well. Now, yes, ILFS has probably been the tipping point, but there were some instances of this already being visible. You've spoken about it in the past as well. Do you think the falls and the corrections that we've seen, even though the stocks had run up quite a bit, is overdone, or would you reckon that this is just a normal course correction and we could actually see some more pain in the broader financial space? Keeping in mind, of course, the quote-unquote resolution that has happened on ILFS in the Saturday's meet.
So I think this is a phenomenon that is pervasive across the NBFC space. We have to look back into cycle, let's say mid 95 onward, 90s onward. So we saw a mushrooming of NBFC then as well, and the tightening in liquidity scenario. This is essentially an arbitrage play. So essentially, whenever you have a tightening liquidity scenario, such kind of arbitrage get squeezed, and the market had given significant valuations to NBFC, so that is actually normalizing, and I think this problem will sustain because ILFS might be an individual example, but you see it across most NBFC space, especially asset-backed NBFCs and housing finance companies, that they had actually enjoyed considerable amount of expansion in margins and ROAs, especially when the demonetization happened, when short-term yields went down, and many of these NBFCs relied on non-bank sources such as mutual funds, etc., to gain out of the ALM mismatches. So I think that is getting squeezed, and I think we are at the starting point, I would say. My sense is that you have a liquidity deficit that is emerging you have a deficit in the LAF and in the banking sector. There is a lot of clustering in bank credit that is happening. So I think this is going to sustain. I think it will sort of erupt at various points of time across multiple NBFCs, especially those that have very large ALM mismatches. So I think I would say if you look at the authorities, there has been response from RBI, there has been a response from coordinated response from government as well. Government said that we'll borrow lesser. RBI said that we'll sort of give that liquidity window and purchase through OMO. So I think these are all reciprocation to a situation that is building up. So my sense is that if there is a sort of a rally based on such announcement, I would sell them, especially in the NBFC space. So in the overall BFSI space, my preference essentially remains for banks who have growth capital and have very well managed asset liability management. So I think asset liability situation for the next two years. So I think that is what I am focusing on.